Maybe some of it's, I don't know, maybe some of it is lead bars covered in gold plate or whatever. What the hell? You get sick of this. There's all these risks, and I really hope people think about this stuff. People go, oh, hold physical gold. They have no freaking clue of the risks you run of holding physical gold.
Gold, GLD. Regarding GLD, because this is paper gold, don't you think this ETF should be avoided? Same with SLV. Thanks for all you do. That's from Glenn.
Okay, good question, Glenn. So what we did here, we went to the, I think this is the prospectus for GLD, and that's what they say. So they say the gold, so GLD is not a paper asset. It's backed by physical gold, as we've been led to believe. And who are we to query, JP Morgan, HSBC, and the auditors who audit the stuff? Now, you guys may know stuff that we don't. Fine. So it's physically backed. It says there that all the gold behind GLD, or supposedly behind GLD, is backed by in vaults at JP Morgan and HSBC. Now, maybe some of it's, I don't know, maybe some of it is lead bars covered in gold plate or whatever. What the hell? You get sick of this. So SLV will be the same. So the thing was like, okay, for this to be bullshit, the auditors have to be bullshitting. Or someone's going to be bullshitting the auditors, so on and so forth. So,
well, it's not like that hasn't happened before, or there hasn't been.
Well, yeah, it's happened before, fine. The other thing too, go to the next slide. So we've taken, now, the market is smarter than us. If there are problems, the way we see it, if there are problems in terms of enough folks out there who are more informed than us knew what was going on, that there wasn't the gold behind GLD that was being talked about, or the Sprott Physical Gold Trust, yeah, they'd be shorting it, and they'd be buying gold and shorting the physical stuff, the GLD. And so we've taken here those three, the gold, XAU, taken the Sprott Physical Trust, taken GLD, we've indexed it to 100 here as of like, it must be a year, 6 months ago. What is it? No, that's like, I don't know, whatever is it? Yeah, no, it's probably 12 months ago. Whatever. So, and it's 1-to-1. They move out of line every now and then by a little bit, and they come back in line again. But it's no big deal. So if there were discrepancies, you would see a big gap opening up between the price of gold and GLD or the Sprott.
The other thing is, we've done a whole video on this exact issue and the difference between physical gold and paper gold. I would recommend go watching that. It's in the members area. I think it's in the Start Here section where we say, this is to get exposure to the gold price. It's not the same as holding gold. They're two very different things. But if you think gold is going to go up, then you've got, rise in value, then you've got the choice of buying something that you can trade easily through your brokerage account, or something that you've got to go pick up, store, pay for storage. When it comes time to sell, you've got to sort of arrange that. And there's all this sort of, all this admin that comes with owning physical gold. We advocate doing both, and the physical gold you hold being a, your sort of nest egg that you never touch, that is yours, and you've got custody of it, and we're prepared to deal with the risk of any hijinks going on in the financial markets. Wouldn't that accurately summarize our position?
Yeah. I mean, look, there's two. We'll talk about this later on, so maybe we'll talk about it now and avoid us having to talk about it later on. So if you're going to store, okay, so let's say you think, okay, that's just bullshit. These guys are there's something fishy going on here. They've got a whole bunch of lead bars covered in gold, which they're reporting as gold bars, or something like that, whatever. You can say, oh, I'm going to go store it myself. So what do? Well, A, you can buy it and get it stored at like the Perth Mint in Australia, or I think there's mints in the Singapore, Chris, is that right? And somewhere else, wherever.
Singapore, Hong Kong, Dubai.
Okay. Yeah, well, okay. So now you're trusting those people to hold the gold for you. So you're going to trust those people more than JP Morgan and HSBC? Fine, whatever. Or you hold it yourself. Where are you going to hold it? No, I could go and buy, $500,000 worth of gold bars and go and bury it on my farm. But I've got to tell someone where I've buried it. But then that person could, go in the middle of the night, go and pinch it. You got to trust your wife, don't you? Or if you don't tell someone and you die, well, or you put it in a safe in your house and someone finds out about the gold in your safe and they come and put a gun to your head. Well, that safe's going to be open pretty quick, isn't it? Or you put it in a safe deposit box in a bank. The thing here, folks, there's all these risks, and I really hope people think about this stuff. People go, oh, hold physical gold. They have no freaking clue of the risks you run of holding physical gold. This is practical stuff, folks. Practical. It's like, seriously, you're better off just owning GLD. Seriously, with all the risks you run elsewhere. Otherwise, the only one redeeming factor for holding physical gold is that it's hard to trade. So you're more likely to be a long-term holder than going, oh, I don't like GLD anymore, gone, And also think about, if you want to hold physical stuff, go and buy physical gold. What's it going to cost you in commission? You're going to get spanked on buying the stuff, and you're going to get spanked getting out of it.
This is true. We've got more. Do you want to add anything, Chris?
No, I mean, I think if you're going to go down the path of owning an asset like that, by all means, do it. It's not difficult to do. You stick some, as Brad mentions, in a safe or in any vault somewhere in the world if you really want, and knock yourself out on that. I think really the discussion here, that because we're running a fund or a couple of portfolios, like the topics of discussion that we can speak sort of more authoritatively on is, what do we own and why do we own it? So all the debates around how you own that, I mean, they're almost like tangential to it, right? So if you want to own gold, personally, fine, knock yourself out. If you're talking about the portfolio that you're running, that's going to be listed security. Within that, we own GLD, we also own GDX, and so we can talk about the merits of the two, perhaps, right? But in terms of, do you own GLD or do you own physical? Like, that's up to you.
Very good. Okay, sticking on the subject, end of 19th century was about reinforcing trust in gold, while at the same time, same people were getting ready for next moves to shift away from gold, which, although delayed by opposition, could not be stopped, and ultimately the Fed was born in December 1913. There are speculations of evaluating gold from current book value of $42 to current market price, which is 20 to 50K, or the wildest, 138K, which, given the declared US gold reserves, would cover all 36 trillion in debt. What's your take on physical gold for individual holding? Hope no expropriation will be ordered by governments, and gold bugs investments for the next 5 to 10 years. And that's from Zen Street.
I don't quite get this. So they're currently valuing gold at $42 an ounce, and they will revalue it to 138,000K an ounce. Like, I'm what? What am I missing here? There's a price now. There's the price for gold is whatever it is. Oh, for goodness sake. Anyway, look, I get passionate and carried away by stuff, so forgive me. But anyway, one should be there's a lot of stuff out there on YouTube and stuff that folks have been listening to. A lot of people have been talking about, and these people are not accountable. Right now, they may come up with elaborate stories, etc., etc. Okay, you know, put your balls in line. Like, you know, what are you going to do about it? Or what are you going to? They're not accountable. They can say whatever they want, and they'll come up with elaborate stories, and people go, "Oh, that's a nice story." It was an interesting. I digress. Stories, folks. I remember there was a Barry Ritholtz did an interview of this Jewish guy, this Jewish academic. The fact he was Jewish is neither here nor there. I forget his name, but he was talking about the ability of human beings to tell stories. That's what we're all about. We're about stories. Good luck on AI with that. Anyway, I digress. Coming back to it, we get hooked on stories, and that's why I think a lot of folks get hooked up on here. And I think we've got to be very, very careful resisting these stories because it's just bollocks. So be careful getting caught up in the whole gold crazies thing. Look, gold's going higher for all the reasons we've talked about, and it's not bloody, you know, London Metal Exchange or whatever deficiencies there, whatever that might be icing on a cake. Who knows? One of these days we'll have to sell, and what will be the signal to get out? It's not gold's at $10,000 an ounce or 15,000 or 6,000. Pick a figure. It'll be when everyone starts thinking that, oh, I need to have gold as a 5% or 10% allocation in my portfolio. When you hear of big pension funds saying, no, we have to have gold miners, and gold miners have to be 10% of our portfolio, whatever, or gold. And then you think, nah, that's it, we're out. Whatever the level is going to be of gold at the time, well,
when Forbes is running and Times has their front cover, and as a percentage of the S&P 500, you're well above the current levels, probably 5 times. There'll be a number of factors, and all of them will combine, and we'll look at it and we'll go, the upside is no longer adequate for the risk that we're taking, and there will no doubt be other opportunities that they'll be waving their flags in front of us, and we'll go, hey, let's go do that.